Welcome to the StockManor.com studios. I'm your StockManor, Brian Johnson, and we are getting ready for the new week of trading. Last week held a couple of surprises for us. We had a little move down by the Bears, only to be bought right back up by the Bulls, and then we just kind of wandered around for a day or so, especially Friday. Friday was an especially boring day in the markets, but not out of the ordinary. A lot of consolidation, guys. The last few weeks have been one, maybe two good moves during the course of a week, and then consolidation and consolidation and consolidation. And then you hear me preach this to you all the time, and I know you're tired of it, but it's the truth. It's so important to have individual stocks in your back pocket that you can watch or play or do something with. And that's whether you're a day trader or a swing trader or an investment I don't care any of those, because when the indices aren't moving, that doesn't mean that individual stocks aren't. And you can find a lot of really good plays. You gotta have, and you gotta do your due diligence, and you gotta do your homework, and you've got to find things that are going to in fact move, to give you an ability to maybe pull a little extra money out of the market here and there. Because sitting around waiting for this thing to do whatever it's going to do is starting to get a little bit more than annoying from a longer term investment type of a standpoint. So what we are watching, of course, is more consolidation here, and you can see where we're bouncing between now. It's 11,150 and basically 10,975, or just 11,000. Call it good and round it off here. But there's about a 150-point bounce in the Dow that we've been working on here for quite a while. A little bit below, a little bit above, but overall really keeping right in between this tight little range here. So we're waiting for, of course, breaks, as we have been, for these places to see some higher prices. As this thing moves sideways, though, it's still neutral to bullish, guys, and maybe it's going to end up wandering its way into the elections. We got about 2 weeks left, and then we can get through all of this QE2 talk by Bernanke and the Fed, and we can get through all of this all of these elections and just be done with it and let the markets get back to abnormal, and so the rest of us can at least start playing again on a longer term time frame. I know it's getting frustrating, and I'm frustrated, but we are going to see a turn. There's just no question about it. I mean, it's getting to the point now where it's almost comical at the fact that you just can't seem to get the markets to move. They still want to move up, and then the Bears try to push the ball down the other side of the hill, and the Bulls go, no, 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 and they push it back up the hill, and then you're like, oh, good grief, will somebody just give up? My wife always says, let's just do it, even if we, let's do something. Even if it's wrong, let's just do it, It's just meaning that let's just do something, There's got to be, just let the markets move. Let them do something instead of just sitting here. So if we look at the Dow on a daily, you can see where we're stuck, right below this, go figure, this heavy, what should be heavy, overhead resistance. Now, 12,258 is ultimately the highest high up here, and we're playing around about 30, 40 points below it. We're going to find out if that's going to hold. But you can see what happened after this push up. It didn't end so well for the Bears, or for the Bulls. Okay? I don't see any reason why this isn't going to end up the same way. The question is it going to end up this way next week, or the week after, or the week after, or the end of the year, through Christmas? I wouldn't expect that. I would expect a pullback here within the next couple weeks, but it doesn't have to happen Monday. So wait for these breaks. Just let it break below 10,900 and or let it get above this area. If you want to go long, great, but be cautiously bullish. Be cautiously bullish, because you don't know when the thing is going to move back to the downside, and you don't know how far you're going to get on a move to the upside. I made a recommendation that if you want to take this thing up over 11,150 or up over 11,200, go, but don't get caught in this little wick thing. And we saw that. I don't know if anybody jumped in on that, but I mean, that's exactly what we saw. It tried to break above it, and it just couldn't hold it. So we're just waiting. Let this thing tell us which way to go. I know it's frustrating. I know it gets boring. And I know that deep down you're thinking, I'm not in the market. If I'm not in the market, I'm not making money. The truth is, that is the opposite of the way you should be thinking. You should be thinking, if I don't have any money in the market, I'm not at risk for any loss. You see the difference? Huge difference psychologically. It all depends on how you think about it. So think about it in terms of capital preservation up here. Just be careful with your money. If you have to sit around for a while and wait, okay, so be it. I would rather have one trade a month that paid me $1, $2, $3,000 than I would trade 40 times a month and lose 300 by the end of it. It doesn't make any sense to me. That's not even rational. So let's just wait and let this thing break and make its moves. Same thing here on the NASDAQ. Look how strong it is. One hit, two hits, now three hits. No reason to think this thing can't poke above. It has not broken this blue line, and back below this level is what we want to watch for shorts. If you're interested in doing that on the NASDAQ, which you all know I'm not if you've been following me for any length of time. I don't like to short the NASDAQ. I like to go long the NASDAQ. It was strong again on Friday. that was actually not a bad index to go long on Friday. It was strong. Go figure. It's the NASDAQ. So any push back up and over these levels, guys, watch for it to hit maybe 2150. It could make it or come close, 2125 to 2150. Those would be the areas I'd be watching. We've got two closes above this 2060 area up here. 2040, 2060 was a big area of overhead resistance I talked about. We blew through it and now have closed twice above that area. So as long as it stays there, bulls are great. Any push back up, 2150 is the next overhead area to be watching in this new week of trading. SPX on the 60's been messing around with this blue line. I could maybe mess with that blue line myself, but I like it. I like that it hit here, 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 here. We break above it, come back down, and then we dance with it for a while. But there's still little bits of support and resistance that it's providing all the way through. And then here at the end of Friday, you can see it hit here and then just wander sideways before at the end of the day, popping up to, oh yeah, hit here again. So I like the line. The line's strong. It's working well. Doesn't mean we can't get a little bit more of a push just above it. And if we do, maybe we can crawl our way towards 1190, 1195, and or 1200. But, oh, man, now you're getting into ranges over and above 1190. It's just anyone's guess. I'd be very cautious of taking any longs over 1190. I really would. So watch it very closely up over 1190. At that point, I don't know if I'm all that interested in going long the SPX. You got to be in and out quick. Make it a day trade. Don't hold overnight, and just play the market for what it gives you. Otherwise, if it can push higher, 1210, 1220 maybe at the highest, but man, those are reaching. Those are some serious levels. We have the 200 we have to contend with. It hit here, it stopped, and it moved itself back down, and now we have this level to be watching as well. That's 1195. You have to keep this on your charts this next week. It is something to absolutely watch as the new week begins. It's more important that we close above it or close below it rather than just get above it during the week and then not hold it by the end of the week. So remember, weekly candles, let the week close itself out. VIX on a daily have this little falling wedge we've been watching for a while. As this thing bleeds out, this just gives option buyers an opportunity to get in at a better level. But this thing has been hovering down here now for a few weeks. So depending on when you're buying your options, you might be bleeding to death if you're buying front month options like November. I wouldn't be doing that. I'd be buying my options out, especially if you're looking on the put side. I'd be probably buying my options out for January, March. Somewhere around in there, just to be on the safe side, because you just don't know when this thing's going to turn around. We get breaks above here, and that's probably going to be your get-go level on the options side. That could be where the VIX starts to take off. I went ahead and drew those lines in two on the weekly to give you a better idea of what that looks like overall, bigger picture. But there's room to move to the downside. As I've said before, as long as this thing moves sideways, it just keeps opening room, either up or down, depending on which direction you're going. In this case, down. Now it has room to get back down here and maybe even sneak below here for a day or two, touch this, and then zip back up again. Very plausible, very plausible. Apple changed the lines. You can see what we're working on here. And ultimately, I really think this is more of a falling wedge, which means, yeah, potentially more upside to Apple. But we got to get back above 315. If you want to be more aggressive, you can take it above 310. But 315 is a more conservative place to play than 320. Above that, Apple's going to continue its climb. No reason to think that it can't. But drops below 305, 300, and ultimately 295 start to get me a little bit more bearish than on Apple. You can see the channel that it's following, doing a very nice job here after the breakout of the uber long consolidation it had in through here, and then a blast through, up, back, and then up again into earnings, where we then pulled back to 300, but held very nicely so far. So we do have opportunities here to watch Apple to the upside. Breaks below that blue line start to get me a little bit more bearish, and that is right there around that 300 mark that I keep talking about. Apple on a weekly, you can see move up, move sideways, move up, move sideways. I don't know, potential topping candle, but how many times have we seen topping candles that just have not worked since, oh, I don't know, '09? So I wouldn't get all that excited about the potential topping candle. Don't get too wrapped up in that. Got to have confirmation. Once again, below 300 and below 295. Then maybe we got something to talk about. But right now, Apple's doing just fine. Very difficult to short such a strong stock. You guys are you're really gambling with that. There's better shorts out there. There really is. Faz, I went ahead and drew some lines in for you guys to see this weekend, and you can see where we've got these three blue lines that have been doing a pretty good job of holding this and containing this price action for the last week or so. Looking for breaks, up and over maybe 23 for a long, and then back below 22 for a short on FAS. I like it here too. On a daily, you can clearly see this symmetrical triangle kind of painting out here. I kind of like that look. So once again, above 23, above 23.50 for the more conservative, and or below this 22, 21 area or so before you take a short. But either way, this just kind of looks like a big symmetrical triangle. Where it's at and the placement that it's in has to get me still a little bit more neutral to bullish based on what we're seeing in the market. So just watch for a break one way or the other on the blue lines. FAZ, here are the lines to the downside. Looking for your trade above, I'd say $12.90ish or $13 ultimately. And then below $12.30 or $12.20 on a more aggressive shorting opportunity. Still stuck in this falling wedge, which is still ultimately the bigger picture in what we're looking at for trades. Above 13, not bad. Below 12 for your short. All right, so there you have it, guys. That'll do it for today's video. I'll be back with you again tomorrow. Now remember, I will not be back in town until late Monday afternoon, so the video will be out, but it will be out late. So that will be probably, I don't even know, 9 Eastern time. 9 Eastern time, I think, is about when that video will make it out. So I will have one done. We'll see what we get coming into early next week. Mondays have been good to the markets. Don't be surprised if we happen to get a little bit more of a droll to the downs or to the sideways, and or maybe a little bit of a pop to the upside. Remember, we have room now above us to at least creep our way upwards if it wants to continue to do that for the next week, 2 weeks, whatever. All right, see you guys again on a Monday night. Hope you have a good day of trading, and hopefully nothing too major happens. I don't want to miss it. I'm going to be in a plane most of the day. So we'll see you again Monday night. Bye.